As October marks the 9th consecutive month of declining numbers, housing sales have continued to decline. Sales were down 5.9% from the previous month, and on an annual basis, they were down 28%. Since it's the longest downward trend since 1999, analysts are wondering what it might mean for the housing market. Because it's not all that bad, just like a lot of the economic data we're seeing at the moment, average values have so far been holding up reasonably well, despite the numbers of home sales clearly showing a downward trend. In October, the median home price in the US reached $379,100, an increase of 6.6% from the previous year. However, it's not all sweetness and light because that sum has decreased from its June high of $413,000. So what exactly are we seeing here? Is it the start of a housing market downturn, with home sale numbers continuing to fall and the median price falling from its peak? Is real estate simply taking a short break from resuming its charge? Why is the real estate market cooling down? The housing market is clearly cooling off. This follows a couple of years of extremely strong growth despite the disruption caused by COVID-19 pandemic. We could really blame the Federal Reserve, although blaming is probably a bit harsh. The reality is rising interest rates are having a direct impact on the housing market. The Fed is currently fighting inflation hard, which has resulted in 4 consecutive 0.75% point increase rate. If this happens once, it would be a significant hike. Having it happen 4 times in a row is a big shift. Let's say a couple is looking for their first home and discovers their dream house is worth $400,000. With that in mind, if the interest rate is 3%, the couple would be looking at a monthly payment of $1,686 for a 30-year mortgage plan. With interest rates currently hovering around 7%, the same mortgage would cost them $2,661 per month. The same house, same price, same down payment, but a mortgage that is nearly $1,000 a month higher. This will simply make purchasing a first home unaffordable for many buyers. The issue extends beyond first-time home buyers, really. And the same problem arises for its current home buyers who want to move. Although it's occasionally possible to transfer an existing mortgage to a new home, most people move in order to upgrade rather than downsize. Like me, I have a 2.8% interest rate. Why would I get rid of it? It's so cheap. In order to make the move to a bigger or more luxurious property, many home movers will need to add some extra money to their mortgage in this situation. Once more, this is much harder for those in that situation now than it would have been 6 or 12 months ago. This causes a slowdown throughout the chain. Fewer house movers mean fewer properties on the market for sale and fewer buyers looking for a new place to live. Lower supply would normally lead to higher demand, but in this case, both demand and supply are falling. Obviously, we don't have a crystal ball to predict what the future of the housing market will be, but the current trend is expected to continue for some time. We can be reasonably confident in this because the Fed Chairman Jerome Powell has started his interest rate policy intentions for the coming year, in which mortgage rates will likely to go much higher, seeing peak base rates being close to 5%. Alright guys, thanks so much for watching my video. If you have any questions, feel free to leave a comment below, and I'll see you in the next video.